Today I am going to be talking about capital gains and the 1031 exchange. So, today we are going to be getting into the 1031 exchange. I'm going to be giving you information about what the 1031 exchange is and how helpful it can be with homeowners and property owners. So I do have my notes over here. I have my notes. So you'll see me looking. I have my notes here. Um, and I want to be detailed as possible in this video. If you don't know me, my name is Charlene Randall, and I am a tax professional, a tax strategist. So not only do I prepare returns, but I also help you strategize with your taxes so that you can have the least liability when it comes to tax. And we do tax optimization to make sure that you are getting all your deductions and credits. So, as I said, a lot of people are doing 1031 exchanges, um, but then there are a lot of people who are not doing 1031 exchanges because they are not educated on it, and then they lose money. So if you don't do a 1031 exchange with your property, you end up losing out and having to pay a hefty tax to the IRS. So everyone, when they hear taxes, it's like, oh my God, taxes. It's like taxes is a bad word. But if you know how to use taxes to your advantage by having a tax strategist like me, or by just making sure that you have the information to understand how you can take advantage of the taxes, you can be in better shape. So, capital gains basically is the tax that's paid by individuals who sell an asset. So basically, that's property, which we're going to be talking about today. That is stocks, bonds, and also any type of collectibles that you may have. Welcome to everyone. Jennifer, welcome. Jennifer McKinnis, thanks for joining me today. So, the capital gains tax is when you sell an asset, the IRS has a tax, and this is the capital gains tax. And this tax is taxed on that asset when you sell. So, 1031 exchange, if you own property, that property will be taxed and you'll lose 25 to 30% in that transaction. Now, if you are not educated on it or no one has told you, you might not be aware that you can actually not pay that tax and put those savings, and this could be thousands and thousands of dollars, right? Those thousands of dollars, you can put it into a new asset. So within property, do the 1031 exchange, and then the savings that you have by not paying those capital gains, you are going to put it into a new property. And if you don't, basically you're going to have to pay that. So you know how many people are doing selling their property without doing a 1031 exchange? Lots and lots of people. So lots and lots of people are not utilizing the tax code as they should. So I'm going to tell you some things that, why, you know, some people just, lose out. And this bill, stresses people out, of course, because no one wants to pay that. So, you know, you worked all this time to put equity into your investment, and then when it's time to sell, you give a percentage to the IRS. You don't want to do that. You want to make sure that you have a strategy. You have a strategy set up so when you sell that property, you can then reap the benefits of your hard work hello, everyone. Thank you for joining me. Please like this video so people can see it in the algorithm so I can keep sharing and teaching information. Thank you so much. So, if you don't execute a 1031 exchange, you're basically throwing money away. Okay? So, you're not going to walk away. Let's say you have $1 million property and you're thinking of selling this property. So, if you don't have that 1031 exchange in place, you're definitely not going to walk away with $1 million. You're going to walk away with 700,000. Wouldn't you want to keep as much equity with that $1 million property and not give the IRS $300,000? So the IRS takes that. If you don't use what the IRS has given you this opportunity for the exchange, then the IRS is going to take that from you. You're going to walk away from the sale paying $300,000 right off the top and have nothing else to do but give it to the IRS. So your equity is constantly at risk, and this is for property owners or soon to be property owners, investment property owners. So your IRS, this your equity is at risk by the IRS because they will be ready as soon as you hit the closing table. So as soon as you go to the closing table, they want their money. Okay, so people don't even understand that when you have the capital gains tax, it's not just 15% or 20% that people think. Okay, it's a little extra tax. I'll pay it. No, it becomes more than that. It becomes complicated. You have the federal capital gains tax. That is about 15 or 20%. Then you have depreciation recapture, and a lot of people don't know about this. So the IRS recaptures the tax breaks that you took over the years. So you have taxes that you pay on a property, an investment property, over the years. So the IRS is going to take their percentage of that as well at a 25% rate. And then you also have state and a net investment in taxes, right? So this all adds up, and this adds up to what you could be losing, or with strategy, a 1031 strategy, and you can book a 1031 strategy with me if you are an investment property owner and you want more information. But this is what you will be losing if you don't do a 1031 exchange. So when you add this 20% plus the 25% state and federal capital gains tax, uh, that is basically that the money, the 30% that is at risk anytime you sign a listing agreement to sell your property. And you have to understand that if you don't have a strategy, there's nothing you can do. There is nothing you can do to protect that investment. There is nothing you can do to protect that money that you believe is yours or you don't want to give away to the IRS. Once you sign a listing agreement, the clock is ticking for a 1031 exchange. So if you haven't discussed it before, then you're definitely going to have to make a decision really fast in order to even get the 1031 exchange done. So it's better to strategize with a tax strategist so that you will know what you're walking into, what you're looking forward to, and how to save your investment. How to take that money, and this is for the tired landlords. This is for any investor who is selling an investment property. If you're selling an investment property, then you want to do a 1031 exchange. There are even options for those individuals who feel like they don't want to do any toilets and they don't want to be a landlord. They don't want to do, fixing or rehabbing or any touching of a property anymore. These landlords are fed up and they have served as a landlord, and now they're ready to, have a time on the beach and vacation because they've been dealing with tenants for so long. So there's even a strategy for those individuals to put money into a new property where that income can become passive and they don't have to do the maintenance, the old maintenance that they used to do, and that hands on as a tenant. So a 1031 exchange can save your money and make it work for you to build your wealth even quicker, even passively. So, that's definitely something I want everyone to know, that it has an investment property, because so many people go to create a listing and then they don't know that they are about to give away their investment money that they work so hard for. So the money that they work so hard for, they're about to give it away when in fact they can do a 1031 exchange and keep those taxes in their portfolio and actually still make money passively and don't have to be a landlord anymore if they don't want to. Because I know a lot of people say, well, I just want to give up investing completely because I don't want to manage this way. Or, I have rentals, but I don't want to manage my properties like this, so I'm giving them all up. So you don't have to do that. You can actually get with a tax strategist and find out what you can do to create this 1031. Now, the 1031 exchange is definitely a timed process. So it's very complicated. So you have 45 days from closing to find a property, a replacement property. And you have 180 days to actually complete the give up the relinquished property, or and I should say, there's no or, and close on your replacement property. Now, if you don't do these things, the IRS has set rules, and they are not giving any second chances. So the IRS is basically saying you must do this within this window, within this time period, and then we will give you this tax break. We will let you roll over your equity into your new property. But if you don't do it on time, then it's going to be non existent. It's going to be canceled. It cannot be done. So you have to make sure that you are definitely doing this within a time span that is given by the IRS. So many people want to know how the IRS tax code allows people to not pay certain taxes. And this is definitely one of the things that you need to know, especially if you're interested in becoming an investor or you are already a property investor. So, this is what you want to know. So, you have to really, really tell yourself, I need to get a tax strategist. If you're interested in keeping your equity or you already have thought about selling your property, because you are going to pay that potential tax burden and it's going to take away from you. So 145 days to find your replacement property and it has to be identified, and then 180 days to completely close. And as I said, the IRS has strict guidelines. So, you know, make sure your seller, make sure your the seller of the property that you are buying is basically in and agreed to. Everything has to be done, because even if that seller backs out, that's going to be a problem for you. but you will make sure you have uh, some like secondary, you know, protection. You want it to be done as soon as possible. So no one is going to wait. If we're doing a 1031 exchange, you're not going to wait until the last day. Let's say you're not going to wait until the last day. Not as a client of mine. You're not going to wait until the last day. So basically, you have to really take this seriously. So you don't want the IRS to be your partner in your portfolio. You want to make, because then they're taking your money. You don't want the IRS to do that. The IRS is giving you a way to create more equity from your investment. So that's the route that you really want to take because it gives you this big advantage. So you want this advantage when it comes time for you to sell your investment. So it's so many reasons why people can sell or are ready to sell their investment property. It can be an inherited property. You can be a tired landlord. You can have too many rentals. You could want to get a bigger rental property because not everyone wants to sell their property to be done, right? A lot of people want to either make more money or do something that they haven't done before, get a bigger investment so they could work less and make more money and build more financing and build more equity within their investment portfolio. So a lot of people use 1031s, but the ones who don't miss out so much by giving that chunk of money to the IRS. So you have to, really be aware of the things that you can do and what you can't do. You have to have a smart tax strategist. You can always contact me, randallparalegal.com. Go to the website, and I'm also going to put it below in this video. I'm actually doing a live, and I want to say hello to everyone. I've seen that some people are speaking. Jessica Harris, Vivian Latrell, thanks for joining me. C6 Entertainment, Jennifer McKinnis, thanks for joining me. Um, I'm going to put my website in the bottom of this video so you can contact me. But share this video as well. Make sure you click subscribe. I'm going to have a lot more tax information, financial information in general on this channel, um, Charlene Randall Financial. But I want you to know that if the IRS is giving you a tax advantage, it's your responsibility to find out about it, get someone that is educated on it and use the advantage. Use it to your advantage. There's so many people out here who, just don't know and they've sold properties and lost out because they didn't have the knowledge on how long you can own the property to be able to do it. People ask the question, can they do a 1031 exchange on their primary residence? And it's a lot of questions, and I'm going to be answering all of those questions here. So thank you to everyone for watching, and I will see you in the next video, and I will see you in the next video.